These are my very top 10 tips on how to arrange a large mortgage. Tip number 1, we need to list your income, your assets and your liabilities so we can assess how and what will be the very best terms based on your circumstances. Number 2, it's vitally important to work with your professional advisors, whether it's accountants, lawyers or family offices, to provide evidence of your income, your assets and your liabilities. So be prepared. Tip number 3, we need to assess what assets you've got, whether that's Bitcoin, single stock positions, offshore funds, gold, silver, pension funds, etc., to see how we can be creative when using those assets to get you the very best terms. Tip number 4, how do I get the lowest margin and the highest loan to value? This may be what we call a blended facility where you use some of your assets plus the mortgage to get 100% loan to value. Tip number 5, high street banks will have cheaper money than private banks in terms of margins over base rate. To give you an example, today sub 75% on the high street, you're looking at a margin of 0.33%. With private banks, margins can be as low as 0.85%. Average pricing with private banks is probably in the 1.25 to 2%, depending on your circumstances. Tip number 6, fully understand the options that are available to you, whether that's a fixed rate or a tracker rate, or you can get the best of both worlds. And what do I mean by that? You could have half of your mortgage on a fixed rate, half on a tracker rate. You could even put someone on an offset facility. So it's really important to explore what options are available to you. When looking for a $1 million+ mortgage, you need to calculate all the associated additional costs to arrange your private finance. This may be stamp duty, legal fees, bank fees, professional advisor fees, valuation fees. List them, make sure you have sufficient capital for them so there are no surprises or shortfalls when proceeding. Tip number 8, build an emergency fund or have some liquidity in the background to avoid any unfortunate mishaps that may happen, whether that's a car breakdown, a burst water pipe, or the loss of employment or income that may put you under some financial pressure. So make sure you have some sort of emergency liquidity buffer in the background. Tip number 9, make sure you read the terms and conditions. Most private banks, for example, will lend for a term of no greater than 5 years. High street banks can go up to 40. They are different. Can you overpay? Are there any early repayment charges? And is the mortgage portable? And when I say portable, are you able to transfer the mortgage from property A to property B if your circumstances were to change? Most lenders do allow this, subject to fresh underwriting. Top tip number 10, avoid taking on any additional debt during the mortgage process. This may impact your credit score and the underwriting of your application. And finally, please don't forget to subscribe, like, and/or comment below. It really helps me on the channel, and thank you so much.